Delve into that 50% increase they're demanding in Zambia.
I think the key question on investors' minds is, are we going to have another Marikana in Zambia, in the copper belt? And I think that is highly unlikely. The reason being the dynamics are different, but we can conclude that generally there is quite a bit of unrest. We saw strike action towards the start of the year, where we saw wage settlements that are above 15%. Barrick Gold, Glencore, and First Quantum settling at those levels or above those levels. So clearly there's going to be pressures for the mining companies as far as costs are concerned. And then we've got, on the other side, the potential for cost to increase as mining taxes obviously increase, because government wants to tap into, the country's mining sector. They're only extracting about 12.6% of government revenues in 2010. That rose to about 17% last year. So clearly there's those pressures. In addition, we've got other pressures that will come into the fore as time goes on.
But of course, you also have to look at why they are demanding a 50% wage hike. And we had to look at that in South African context, and we still are looking at that here. I mean, what is the driver of these huge wage demands that are coming through?
Well, we saw Michael Satta's election manifesto, the way he swept to power, saying, well, he pledges to put more money back into people's pockets. So clearly there's quite a bit of pressure on the guys, the so-called masses, or the guy in the street. They want to see delivery, they want to see more money in their pockets. The mining sectors are now feeling the wrath of that pressure. But apart from that, it's quite clear that, these pressures will be building over into perhaps the longer term. 60% of Zambians live on less than $1 a day. So just to contextualize it as well in that manner, you can see that pressures will be tough on the government to deliver.
So of course you've got them, wanting the government to really walk the talk now when it comes to the election manifesto and the promises that were made. When it comes to the mining companies, are they making profits that warrant wage hikes like this at all?
Well, that is obviously a debate that can go on for forever. But I think it's quite clear, if you look at everything in totality, that costs are increasing for these miners. We're seeing electricity tariff hikes coming through. The last time in about 2008 they had hikes, it was around 30% hikes. In addition to that, electricity generation will have to catch up with the planned expansion of the mining sector. So any disruptions for these mining companies will lead to job cuts eventually, or cost pressures. We're seeing, like I've already mentioned, that costs will definitely be on the increase. So the break-even price for these mining companies is going to definitely increase and put them quite under a bit of pressure.
This is a tough kind of line to walk for President Satta, because he doesn't really want to scare off investors in an era right now that he's just taken on the helm of the government, and he needs their investment really to underpin diversification of the economy, if that makes sense. So do you think that kind of all the wage pressures right now, the cost push pressures, are going to do that, make Zambia a less attractive mining destination, or do you think that the goods underneath the ground are just too good to not be involved there?
On an overall basis, it's still quite a positive story. We've seen quite a bit of interest. BHP Billiton still wants to go in. Min Metals has also expressed interest in the country. There's big expansions from First Quantum over the next 2 years. They want to be the biggest copper producer. So there's quite a bit of interest in the country. I think if one notes one particular thing, 780 tons was produced in 2011. The government is targeting 1 million metric tons by 2015. So there's quite a bit of focus to kind of, invest still quite a lot in the sector, and it seems it will be a win-win. But I think, government will have to sit down and look at how maybe to address these challenges like the labor unrest, or challenges related to that, and negotiate or intervene, or the actual unions themselves sit down and talk over the next couple of weeks.